Meow, 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 meow. Why am I dressed up like this? I've got something to tell you about gold and silver. There may be another decline of 50% for both the gold price to 600 and the silver price to $8. Why? We've already had a decline of more than 30% in gold in the last 4 years and more than 60% in silver. The technical pattern looks very negative. And we'll know later what the reasons are. In hindsight, we can guess. Maybe rates will go up. That hurts. Maybe global deflationary forces are gathering pace. Now that hurts. So even if rates don't go up, even if there is another liquidity creation like quantitative easing number 4, it won't matter. Because deflation is increasing as global debt is becoming more unsustainable, as global growth slows down, especially that of China. And what we've seen since the credit crisis in 2008, we've seen the US dollar bottoming out after 30 years of weakness. We may have a multi-year strength in the US dollar because there is a huge shortage. Why is that? Haven't they printed dollars? Well, 80% of the world's debt is in US dollars. And there is a huge pressure to deleverage, especially in emerging markets where commodity prices have collapsed. And they took on a lot of dollar debt. What's been happening is that commodity prices were much too high because of all the pump priming of the central banks, of this huge credit boom, especially in China. So there was a lot of false demand. And now we have huge overcapacity. We have ghost cities and ghost airports. And we see declines of 50 to 70% in iron ore, even in oil, while there is a war going on in the Mideast. Precious metals cannot act independently from the commodity space because they are based on inflationary expectations. We have already 30% of the countries in official deflation, but there is still a lot of denial. This is a secular trend. But keeping a bit of gold and silver as a core position of 5 to 10% in the portfolio still makes a lot of sense. As an insurance, whatever the price, not as an investment. Both gold and silver is something tangible. It's outside of the system. It has no counterparty risk. And that makes sense in these uncertain times. But we should not get scared about all these price fluctuations. It's all part of the cycle. But it does mean there is no question that cash is king, especially cash in US dollars, which has been bottoming out since 2008, since the credit crisis started, after more than 30 years of weakness. In the next few years, the dollar could strengthen even more because of this huge short position against the dollar in the form of this huge dollar debt. And this short has to be covered. At a time that global growth is slowing down, or even worse, we would get a global recession. Recessions have not been eliminated. And after 6 years of having no recession, one may be due. But is the dollar not going to die because of a new currency order? Far from it. The dollar as a reserve asset is increasing above 62%. And the only other competitor, the euro, has just collapsed. And as a reserve asset is declining to less than 20%. And other currencies are not ready yet for the next decade, and maybe not for another few decades, because we'll just have to see what these other countries look like after the hard landing. It's the dollar that may be the last man standing. And along with gold, but we don't know at which price. Gold makes sense, physical gold makes sense, because apparently it makes sense for central banks to own it. Whatever is good for the central banks should be good for you. Silver is a little trickier. It's an industrial metal. It's not part of the reserves of central banks. It's very sensitive to the economic cycle. It's in weak hands. And it makes sense to have something that is in smaller denominations so we can buy things. But make no illusion, it's not an investment. And there will come a time that the silver price will be so low, it'll have to be supported again by the government, just like in the 30s, because it is still a strategic metal. So we should not get upset about these huge fluctuations. But it's clear that gold and silver cannot act independently from the commodity space. And they will suffer along with all of the others. Commodity prices are still 50% higher than their historical average of the last few hundred years. The pain is not over. Not at all. But hard times call for cash. And the reason that we could have a serious price decline in assets that you may love is because when there is margin selling, you have to sell everything. And we have seen that in 2008. A sharp price decline in everything. And we will have a repeat of that. So whatever the reasons for another severe, decisive price decline in the precious metals, a core position still makes sense for the longer term. Till next time.